Hello everybody, Alex here. Welcome to my finance and accounting education channel here on YouTube. Today we have a new episode, namely the second episode. We already had the prologue and the first episode of the series called Who Wants to Be a Millionaire, which is basically following my journey towards becoming a millionaire. I promised to share with you what I'm doing exactly, how I'm managing my portfolio, what I have inside, what are the changes, also details like what kind of brokerages I'm using, if I change anything, and so on and so forth. You have a playlist for this episode, so I'm not going to link the previous episodes within the video, but if you want to see the first episode and the prologue, please feel free. But before we jump right in, I'm going to ask you to subscribe to my channel, to hit the bell notification button, and you will never miss an update on my site. It doesn't cost you anything and it will help me a lot. And once you hit the bell notification button, you will see the updates from my side, which I do them quite regularly these days on Tuesdays, Thursdays and Sundays. You should expect new and hopefully interesting videos from me. That being out of the way, we jump right in. So we have this presentation. If you follow the first two episodes, probably you know it already. So we are going to talk, we have the second episode today, and we are going to talk mostly about diversification and DCA, dollar cost averaging. I'm going to pick for each episode some topic which is relevant and can be somehow illustrated during that episode with a practical example. So what actually happened in the past almost month since the first episode? Well, I opened an eToro account. I already had one, but that was just an affiliate account. And I'm already using it, meaning that I have already 6 companies so the shares of 6 companies on eToro. I opened also a Revolut account, not used it yet. The thing is that eToro has this advantage against Revolut, has this advantage that the transactions are free. On Revolut I understood that there are some minimal costs, $1 or €1 per transaction or something like that. Also, what Revolut might have an advantage towards against eToro is that some of the titles that eToro has are actually CFDs, so you cannot really buy the shares no matter what you do, even if you are trying to buy them with your own money. I discovered that was the case for Aramco, the Saudi oil company, actually the largest company in the world. It's now competing head to head with Apple for becoming the largest company in the world from market capitalization point of view. Revolut has shares, but the list for both of them, the disadvantage is that the list of titles is somehow let's say limited to mostly US and maybe some UK titles. On eToro you can find some other large European companies, but not all of them, and so on and so forth. That's why I'm still keeping my old brokerage, so the bank one, because there, although the fees are quite high compared with nothing on eToro and €1 on Revolut, the transaction fees on my old bank are between 40 and 50 euros for each transaction that I do, but I have access to almost everything basically that's listed in the world. Then I've done some dollar cost averaging, ASML, TSMC, Samsung. You will see that actually for ASML there was a series of within this month of selling and then buying something. With TSMC and Samsung I just added to my portfolio. I haven't sold anything. Then I got into some diversification, Rio Tinto, the global giant in mining, Total, which is a French oil company, and Unilever, which is also a global giant in the fast-moving consumer goods, a competitor for Procter & Gamble. If you know better Procter & Gamble, so Unilever is similar, but it's just an European company. On short term, the portfolio looks bad. I mean, we know that we had in April a 9% drop. May didn't start quite well. There was some recovery at the end of the last week, but not something spectacular. Let's just see what's going on. But you know that the plan is to become millionaire in 10 to 15 years maybe. So what happens in these months or 1 year or 2 years is not really relevant. There I have managed, of course, by opening these 6 positions on eToro to save between 240 and 30 euro in transaction fees from compared with my old bank brokerage. I got into a little bit into debt to size actual opportunities, only 4,500 euros, so nothing spectacular compared to the size of the portfolio. Basically, I have brought in the forward the future acquisitions. I've made them like earlier, which they were anyway planned to happen, and they will happen in a few months, 1 or 2 months. So also nothing special here. So I'm not trading leveraged. Basically, I don't have to sell anything if the share prices are dropping. I just have some debt towards the bank that I have to pay at some point. The automatic allocations happened as usual. So we have the investment plan, 150 euro, life insurances, cash value and unit linked, approximately 800 euros, and the ones which are outside of the scope, the private pensions, the second pillar. Here in Austria, I'm still contributing from my salary. I cannot be bothered to find out exactly how much is per month. I just know that I'm getting every year I'm getting a notification how much money is there. I have some leftover from Romania. Building society interest also 50 euro per month, so nothing spectacular there. And the private pension, so the third pillar, which is also 208 euro or something like that per month. All in all, I think the automatic allocations of last month were, if we are adding everything, around 1,200 euros. Then a short reminder of the plan. I started with the top version. On, as you can see, on 15 years, the plan is to get to 1 million euro, which also needs to be actualized with the inflation. So with an average or with the 2% inflation per year, I should have 1,345,000 or almost 346,000 euros. When I started this idea, I said that okay, I'm going from 100,000 euros with 25,000 euros investment per year. I will need on average a 7.52% return rate to get to this 1 million. Then somehow reality proved to be a little bit different, because this was the idea from December. I started in March, so a little bit later. I have adjusted to the yearly investment to only 21,600. Maybe it will be even more than 25, but right now it's looking like 21,600 because I have these out of scope investments, which are like these automated private pensions and so on and so forth, and I have to take them out of the picture. Then the starting point was not really 100 but only 85%, and I need to actually have a gain, so a return on investment of 8.99% per year to reach to the same numbers. Remember, so this 9%, it's, let's say in bad years it might be difficult, but on an average I think Warren Buffett has 20% per year on an average, so reaching a 9% should not be that hard. I mean, I'm just proposing to reach half of what Warren Buffett was reaching in the past, I don't know how many years, a long period. That's with the plan. Then we have the current situation. On the left side you have the current situation and the previous values on the last column. Here in the first two assets, life insurances, I've thrown 800 euros, and you can see now the differences. Basically, the first one, although I threw in 650 euros, it's actually less than it was previously. So from 26,000 it's 25,000 now, because this is unit linked, so it's linked with the performance of the stock exchanges, namely mostly with the Romanian stock exchanges, which means that the value dropped because of the units I owned previously and not necessarily because I have contributed right now. However, the second one, which is more like monetary, so there are more monetary assets inside bonds and so on, so more safe investments, things like this, has increased in value from 9,749 to 10,040. So you see, this is the difference between the types of assets in in times like this when the stock exchanges are dropping, the monetary assets are, so the money market assets are a little bit safer. Then we have the investment plan here. I also added 150 euro, which you totally don't see, so everything was eaten up by the reduction in the value of the units that I previously owned. And then we get to the juicy part of the actively managed portfolio. So Google down since the last episode, Amazon also down, Apple down, Facebook down, so it's no surprise. Microsoft also down. In ASML there was a sale here, so it didn't drop from 10,000 to 4,758. Basically I sold 15 units here and I bought 5 back at some point, and we will have more details shortly. In TSMC I have increased the position. In Intel, so Intel went down, no movement, so no acquisition, no sales. Samsung I have increased also the position because the prices were below the initial ones. Around town down, there went down, Gecina down, so these are the rates. Once again, Derwent is from the UK, Gecina is from France, and Around Town is from Germany. Axaros is an investment fund actually, but this is also down. And the new entries in the portfolio: Unilever, Rio Tinto, and Total. So this is not the sum; it's the name of the company. It really has, it's really named Total. It's a French oil company, which together with the Eni, which is the Italian, let's say, competitor for Total, they had the best, and at some point I will probably present also the information. They had the best, so the lowest price to earnings ratio and the highest dividend yield from oil companies, from major oil companies in Europe. I also took a look at British Petroleum, at Shell, and actually I selected these two ones for investing: Total and Eni, and also Aramco is still interesting for me. But maybe only on short term, because they will do this 10-to-1 split. Couldn't invest in Aramco simply because I discovered that they are not listed on Revolut, and on eToro Aramco you can only buy CFDs, which are provided by eToro. Then I have also added something which I previously didn't have, the cash position, so I don't have that much cash available, 604 euro. The debt that I got into 4,500, let's just say that it's not actually 4,500, because a small portion of it are savings from the past month, but I didn't complicate things. It's just easier like this to understand. And in total, from 83,444 from last announcement, we are now at 80,000. So it seems like we are not going in the right direction. We started with 85,000 more or less, and we are now at 80. Let's just see what happens till the end of the year. And then you have the the allocations in the things that are left outside of the scope. So these are not very interesting: the pensions and the building society interest and others provisions and things like this. So that's the current situation. And then let's talk a little bit more about this dollar cost averaging, about diversification. It's clear that I went into fast moving consumer goods. I didn't have the fast moving consumer goods company before. I went into mining and into oil, so that's what I meant through diversification. There is a tech stocks sell-off right now. The market was, let's just say that the street, so the Wall Street was, and the big analysts and so on and so forth, were surprised that the retail investors saw the opportunity and continued to add from the tech companies, and they shouldn't be so surprised. The idea was why the large investors, so the institutional investor, why are they selling the tech stocks? Because they said that the current valuation are not realistic due to the inflation, interest rate increase, and so on and so forth, and possible recession in the US or probably also in the entire world. But let's just say that from my point of view, this is a short to medium term approach. I have, and probably also it seems like other individual investors have a long term approach. So for me, it's not really relevant that the Fed is increasing the interest rates with 0.5% or with 0.75 right now, and that we will have maybe 1 or 2 years of economic downturn and things like this. It made sense to add TSMC. Remember, TSMC is the leader in semiconductors with 57% of the market, so market share. Samsung is also one of the largest semiconductors manufacturers and electronic devices. This week we will also have an update on Samsung with the latest quarter results. And the idea is, for me, it still remains, do we need more semiconductors in the future? They are best positions, they are the top competitors together with Intel. Let's say that the Intel is the weakest in this group, but still, and ASML, which is the supplier of the machines for the other three. And it totally makes sense to add to these companies if you believe in the semiconductors and manufacturing in electronic devices and so on and so forth. The troubles that we had recently, and I still think they are going on, that there are not enough semiconductors being manufactured and the companies are investing a lot and so on and so forth. So this has nothing to do with the general context. Okay, the general context is not very good right now with the inflation and so on and so forth, but long term this should not affect your decisions. Yeah, it's exactly what Warren Buffett is saying. If you panic, no matter how good you are choosing the companies in your portfolio, if you panic when the prices go a little bit down, it's totally irrelevant if you choose the right companies or the wrong ones, because panic will go against you and you will sell with less than you have bought and so on and so forth. So if you believe in the companies you have acquired, you need to keep investing and be happy that the prices are down right now and you can buy them at cheaper prices. Yeah. Then dollar cost averaging, so reducing the average cost of your assets by buying when the prices drop below the existing average cost. The story is that if you keep on adding, maybe on short term you will have a very large portion of your portfolio in only one company that might be considered too risky. You are increasing your exposure. At some point I was having 11,000 invested in ASML, which, if you are looking at the actively managed portfolio, was one fifth, so 20%, so it was a little bit too much from my point of view. And if you want to somehow still reduce or keep your exposure reduced, at some point you also need to sell. And when you sell, of course, when the prices go above your average buying cost, never sell at a loss. Why would you sell at a loss? That's why I never understand. Because when you sell something which is in red, you are actually accepting and officially making it official that you are having a loss in your portfolio. So unless you really need the money in that moment, you should not sell anything which is in red. It's only temporary red. And this example which you have on the right side is from ASML, and I'm seeing that for a series of buying and sellings I have managed to reduce my average cost from 664. That was the initial price at which I bought the shares last year. Towards the end of the year, I think, or in the summer, the price was quite high actually, and I have managed to reduce it from 664 euros to 539 per piece. Which means that I have reduced my cost to with 18.83%. And all the sales were made at price points to cover the incurred transaction costs after tax deduction. So I sold it with profit, and after I deducted the tax, I also covered all the transaction costs with my old bank. Now I don't have that much of this problem due to eToro, but still. And basically I sold them with a profit. Yeah. And if you follow, you will see that I first bought 3 pieces with 664, then I bought 3 more with 620, 680. I was already having only a 645 average cost. Then I sold 3 of those 6 with 736. So you see, with 736, which is above all the costs incurred before. Then I bought another, so basically after selling the cost, the average cost is not moving, so it's remaining 645. Then I bought the third time another 3 pieces with 595, then reduced again the average cost from 645 to 620. Then I bought fourth time with 580, so you see with 15 euros cheaper. Then the average cost dropped to 600, so I was already from 664 to 600. Then I bought the fifth time with 538 to 577.59 dollar cost average. So the average cost of per share, and I was already having too much exposure. And once it hit 597, which is above 577.59, I decided to sell 15 of them and cover all the taxation and transaction fees and so on and so forth. And then I had the sixth buy this month, actually, because everything here, the last two transactions happened in the past month. I had the sixth buy with 508. It actually dropped in the same day to 490 or even a little bit lower, but yeah, you cannot really time these things perfectly, but still. And then, which means that I have reduced the cost to 538, so you can see that I started with 664 and now I have them at 538. And the last price I think was like 525, which means that once the price goes a little bit above 538, if I want to reduce my position again to 4 or 5 shares, I can do it, no problem. Then the same happened with Samsung, with only, so Samsung, let's say, is just at the first and second buy, and TSMC the same. So for Samsung, I have reduced the average cost from 1,268 to 1,189 per piece euro, so with 6.2% reduction. And TSMC, I reduced the cost from 95.33 per piece to 87.48 per piece, which is an 8.2%. So this is the idea with dollar cost average. And now if the market is going like down, once it's a little bit up, if you don't want that much exposure, you can sell, and when it's going down, you can buy again, and so on and so forth. And when the market will hit the bottom, you will be the best position for the future growth, yeah, because your average cost will be very low and you will get only benefits. So this is how you can somehow still play the market, even if the market is a little bit bearish for a few months or maybe for a few years. Nobody really knows how long this period will take. That would be it for today. I hope you enjoyed today's video. If you liked it, hit the like button, comment in the comment section if you have something to add about it, share it with somebody that might be interested about my personal journey. Actually, it's the idea how to become a millionaire. But most importantly, do not forget to subscribe. My channel doesn't cost you anything and it will help me a lot. If you hit the bell notification button, you will also get all the updates from me. I do them quite regularly these days. On Tuesdays, Thursdays, and Sundays, you should expect new and hopefully interesting videos. Below this video, you have links. You can create an eToro account. Just as I have told you, I already have one. I'm quite satisfied with it so far. You can trade there without a commission or a fee. Mostly shares, and mostly if you trade with your own money, but you can also get CFDs if you trade leverage, which I don't recommend to you because you might get margin calls and you will have to sell your stocks with a loss, which is very, very bad. But also there are some titles which are not really offered as shares on eToro. The example was Aramco. And below that link you have another one with an Amazon wishlist with hardware and software items which can help me improve the quality of my videos, potentially being also beneficial for you because you'll get better videos on my site. But let's just be fair and say that from financial perspective, the Amazon wishlist is the most inconvenient for you. The easiest way to support me is to subscribe to my channel and to hit the bell notification button, and of course to continue to watch my videos. Once again, my name is Alex Petrescu. This is my finance and accounting education channel. I thank you today for your time and patience, and I look forward to presenting to you with the next opportunity. Goodbye!